Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Monday, the 4th of March, 2019, just after 3:40 p.m. Central Standard Time. I've been delaying putting this out because the president's supposed to speak, and I don't know what he's going to say. You know, it appears that he's going to lose, as you saw in the Senate, the vote, so the Senate will join the House in saying no to his, basically to his emergency action for border money. The president will veto it. We'll see where that goes. And of course, by now or tonight, you will see how many different subpoenas or requests for documents are going out from the House Judiciary Committee, trying to wrap in everything and trying to prove things against the president. In the meantime, we've all dealt with the news on China, where it sounds positive. In fact, they've blocked off a date in the approximate March 27th area for a meeting between President Xi and Premier Xi and President Trump. We'll see what that does. But what it's basically done is the dollar's been stronger at this hour. The metal markets as a group have been down. The copper market was like buy the rumor, sell the fact. And even the grain markets didn't respond much to the word of the trade deal and increased purchases there. And in natural gas, I think they're talking a monster purchase of natural gas over a number of years. Markets didn't respond to it. Markets don't respond to it. The bull news, what you generally get is the market going the other way. And in the metal markets, none of this has been that bullish of news. We've been in a correction from 1329.20, and this is a weekly chart of just closes, and now we're sitting at 1287.60 roughly, so we're down in the neighborhood of about $40 from that high. You can see how the market let go. And once it got through actually these lows right here, it caught what I'll think is a rash of stops that can carry the market into this general zone. If you were watching Bloomberg TV this morning at about 9:50 a.m., I was on. I asked about what trades I'm liking, and I said, you know, I think in the 1270 zone, you might see gold try to gain some traction. We'll see if that's right or wrong. When you come to the daily chart, you're in a free fall. I think you can see where you're at right through there. Where might the market go? Well, as you can see, we're down here. So the 1271.20 on the daily chart is an area that ties in with the weekly numbers that I'm looking at. Bollinger Bands, you're now 2 days under the lower Bollinger Band. You generally don't spend more than 5 under that. I count each consecutive day that a market is above or below a Bollinger Band is one of the percentage points where the market 5% of the time stays above a band or below it. You can see up here you're above it 2 of those, then you correct it. Up here you were about 4 of those days, then you began your correction. So it's a question of pulling on a rubber band and how far before it snaps often. So that's what I'm looking for. I'm looking to see where the market wants to find a little bit of traction, and no, that's not a bullish sign. That is a sign that it's overdone to the bear side. That's what I'm getting at. In terms of momentum, you're oversold. So I have a market that's starting to get a bit overdone, cooked, if you will, well to the downside. Might want to stretch into the low 1270s. In the GLD ETFs, it's the same thing. Now you've got at least 1 day under that band. On Friday, you finished here at 121.88. Your Bollinger Band bottom was 122.18, and with today's action, you're 2 days under that, and also an oversold area. Could the market be headed to 119.30, or does it want to spin back into those bands? And by the way, spinning into the band doesn't mean a dramatic rally. It just gets to the right-hand side. In GDX, the miners, gold miner stock, lower high, lower low. You hit a downside target today. You can see that last week you hadn't hit that band. You hit it today. The market might try to grab some traction there. Certainly everything can fall further, but I question why. So in just looking at the market, I think that you've reached an important level in GDX. The gold-silver ratio has been something I have been talking about regularly to you. And often, that's all I can use. I can't use the word always because it wouldn't be accurate. Often, if you're going to get a rally out of the metals as a group, it isn't with gold gaining dramatically on silver, which is what is happening. You're now back up that you need 85.26 ounces of silver to get 1 ounce of gold. Those were the numbers into an area that you were at back here, and that was in December. When you take a look at how May silver has gone, it extended Friday's break. It went down under the Bollinger Band today, got under the 100-day average. It's oversold. Yes, it could keep falling, but again, you've extended it. You're 2 days under the band, you're under the 100-day average. I would not be surprised to get some Tuesday reversals in the metal markets. In the copper, you've now got a pattern of lower highs, lower lows. So you've left the bullish pattern. You lost the embedded reading right here. Now, it can only be gained back, and embedded means both numbers that make up the slow stochastic are staying over 80, which keeps buying on breaks as the pattern that the market goes with, and I think you can see that right there. When you lose that, it's often, again, not the word always, because that wouldn't be accurate to begin with. Often, that means price and the 18-day average want to come together. Now, sometimes it's the 100-day average. It's the closest of a major average, and in this case, it's the 18-day average. In the platinum, you lost the embedded reading. So therefore, I'll make an argument that price and the 18 or the 100-day average are basically the same. That could be where the market wants to go down to see what's there, what kind of support it might find. There's nothing bullish on those charts. The palladium still hasn't lost its embedded reading. But what it did lose is the pattern of now it's got lower highs, lower lows. So it stepped out of its uptrend, and it really hasn't done that in a long time. It hasn't done it since January, back here. So now the market is in a stall. Could it drop down? Don't know. But I can tell you the part of the problem of this market has been the strength in the dollar, and the market has been discounting, I think, the Chinese-U.S. trade deal for a long time. We keep hearing about it. We get to a point, and then you back away. How many times can you discount the same news until you get the real details of the deal? When you get the details of the deal, I think the metals reset themselves and we'll take another fresh look. We write about this in a lot of other markets in our Linn and Associate research. We write special reports. I haven't done my metals report in a while. We're building, literally as I'm talking to you, where I'm going to do them all in videos. I might start as early as tomorrow. Certainly by Wednesday, I'll have maybe a gasoline report or a metals report, but we're going to start doing them as videos, not as writing. We think it's a more effective way. I can show more. I can explain things in a better, both daily, weekly charts, and I can show seasonals with it, which I think is important. So you can tie all this together with a free trial. How do you get it? Just give us a call at 866-973-2077. You can go to our website. As you see right there, you'll see our carousel of free offers. Click what you'd like, and we'll get it out to your mailbox. You have a great day. I'm Ira Epstein.